Is Bitcoin really a hedge against inflation, or is it just another way to bet on interest rates? I'm Joel Flynn. Welcome to the Daily Forkast, July the 20th, 2022. The role of the world's largest cryptocurrency is under the microscope yet again. US laws on crypto, meanwhile, might not happen for some time yet. Sam Bankman-Fried says the crypto winter has fundamentally changed investor priorities, and the shocking spending of 3AC leads to questions about TPS Capital's true relationship with it. This is what's happening from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Bitcoin has extended its rally overnight, breaking above the $23,000 mark. As of 6 a.m. Hong Kong time, it was sitting at around 23,600. Ethereum remains above $1,500. The rises are in line with a rebound that we've been seeing in stocks. Sentiment right across markets is improving, but while speculation grows about whether or not we've reached the bottom yet, more fundamental questions are being asked about Bitcoin. Namely, is it really behaving in the way its exponents claim? Is it really a hedge against inflation, or is it just another risk asset reacting to central bank policies? Well, a new report claims that consumers in emerging markets are looking beyond Bitcoin's use as a tool for investment. According to crypto exchange AAX and Forrester Consulting, there are too many assumptions being made about exactly what Bitcoin represents. Forecast Danny Park has more.
According to the report, 51% of Southeast Asian Bitcoin owners are using it to preserve the value of their funds, while 44% are using it to offset potential losses or gains in other investments. Speaking to Forecast at the launch of the report, Ben Caseland said that when Bitcoin's use as a hedge against inflation is questioned, it's important to ask whose inflation you are using it as a hedge against.
When we're talking about Bitcoin as an inflation hedge, and now that we've seen a crash, is it still an inflation hedge? That's a very US-centric view on things. Because if I'm in Turkey and the coin, my currency is down 70%, Bitcoin is still an inflation hedge. So it really depends on kind of your context.
The report found that situations such as record lows for the Indian rupee saw many consumers turning to Bitcoin. However, discontent with the cost and security of existing financial services was also cited as a reason. Indeed, around 63% of respondents in the region went on to say that Bitcoin has utility beyond investment returns.
As soon as we go into the emerging markets, for sure, for some people it's something they want to speculate on, but only if they have the means to do so. For a lot of people in emerging markets, it can very simply be about being able to receive money from your family abroad, remittances, and if you guys figure out that it's lower fees, then that helps. If 25% can be a very significant portion of a household income per month.
Financial inclusion is also seen as a key benefit, with 46% of African consumers saying they use Bitcoin to make payments and transfers. We
do have to look at a place like Congo as a very dispersed population with some very vibrant urban centers. Not many people have access to a bank account. How do you send money to your family in a village, who may have a phone connection? Because, I've been to Central Africa and it's very surprising, but you actually have connection in the middle of the jungle.
The report says we all need to break past the hype over Bitcoin as an investment and figure out what it can offer to each individual situation.
It's fine to have such a focus on price and such a focus on, the potential gains that you can make. But now that we're in this decade of adoption, and especially as we see the uptake accelerate in emerging markets, I think one of the biggest obstacles to Bitcoin's growth is to focus on its growth. I know that sounds very strange, but we should just focus on the impact it can have and on the use case it can have, and basically the market will come to its senses afterwards.
The report concludes that education and avoiding misinformation are what's needed to further support Bitcoin adoption. I'm Danny Park, Forecast.
So, is Bitcoin an inflation hedge? Is it an investment, or is it something else entirely? Comment down below what you think, like and subscribe to this video as well to find out more. New rules on crypto in the United States probably won't happen until next year at the earliest. That is according to a key lawmaker sponsoring the US Senate's crypto bill. Speaking at Bloomberg's Crypto Summit, US Senator Lummis says there's unlikely to be a vote on the mooted rule change this year. She said that's partly because other lawmakers could struggle to understand it. Speaking to Forkast's editor-in-chief Angie Lau last month, blockchain legal expert Lily Tesler said there is a lot to work out.
The U.S. has a securities regime and a commodities regime under two different regulators, SEC and CFTC, and right now they're trying to work out the regulators into what jurisdictions the asset fall under, or is it overlapping jurisdiction at some point in time.
The bill also captures tax implications, security laws, and banking regulations. Meanwhile, speaking at the same event, FTX founder and CEO Sam Bankman-Fried took a stand on rescuing troubled crypto companies. SBF said prioritizing customer deposits would justify a, quote, moderately bad bailout deal. Fried has given vital lifelines to BlockFi and Voyager Digital, among others. Those, of course, partly hit from their exposure to Three Arrows Capital. As for SBF's thoughts on 3AC, he said that their trading ultimately resembled gambling. He added that could impact investors' assessment of crypto companies' value rather than their revenue going forwards. If you want more analysis on what all of this means for you, head to forecast.news. That is our website. There's a link to that in the description below. New crypto regulations will take into account the fallout from 3AC's bankruptcy. More details have emerged this week from the failed fund's accounts. That includes some astonishing details about yacht purchases, among other things, during some of its loan defaults. But there's also growing concerns about the true scale and nature of 3AC's relationship with its creditors and with a company called TPS Capital in particular. Forecast Monica Ghosh has more.
A creditors committee to liquidate the bankrupt crypto hedge fund was established earlier this week, while Russell Crumpler and Christopher Farmer of Teneo were appointed joint liquidators by the court in the British Virgin Islands. They've now released over 1,100 pages of court documents revealing facts on how the hedge fund ended up facing bankruptcy. According to the documents, 3AC owes a whopping $3.5 billion to 27 different crypto firms. Also noted is the questionable purchase of a $50 million yacht by 3AC's founders Suzu and Kyle Davis, with delivery set sometime in the next 2 months in Italy. Speculation has it that the yacht was bought using borrowed funds. On top of that, Zhu and his wife acquired a $35 million bungalow in Singapore last year. That property is purportedly being held on trust for their 3-year-old son, while another bungalow was purchased in Suzu's wife's name in 2020. Liquidators noted that company funds could have been used to fund the purchases, as well as suggesting Zhu may be taking steps to sell a significant property to put it beyond the reach of the company's creditors. Meanwhile, despite denying ties with 3AC, court documents show the crypto trading firm TPS Capital is well connected with the embattled hedge fund. 3AC's founders Sue Davis and his wife own over 80% of TPS's BVI entity, which in turn owns 47.5% of the Singapore parent company. In another chart, Tai Ping Shan, which owns 5% of the Singapore entity, TPS Capital, lists Paul Musprat, Steven Sokol, and Yi Long Feng as directors. The three are also listed as directors of 3AC Limited, the managing fund of all of Three Arrows entities. Forecast has reached out to 3AC co-founders and TPS Capital for comments, but no response as yet. 3AC's case continues before US courts on July 28. I'm Monica Ghosh, Forecast.
While the crypto winter is hitting jobs and investment right across the industry, in Dubai, things are actually heating up. The Emirati state has announced some lofty goals for its new metaverse strategy that aims to make Dubai one of the top 10 cities in the global metaverse economy. It will mean creating 40,000 jobs, and it could add $4 billion to the city's economy within 5 years. Crown Prince Sheikh Hamdan bin Mohammed tweeted that the plan is to foster innovation in new technology. Dubai is reportedly already home to 1,000 or so companies working in the blockchain and metaverse. And finally, the US Department of Justice has seized about $500,000 drained by North Korean-backed hackers. The recovered funds include sizable amounts of Bitcoin that had apparently been paid as a ransom by Kansas and Colorado medical providers. The Justice Department said authorities had traced the transactions to a China-based North Korea money laundering scheme. Earlier this year, Reuters cited a United Nations report which claimed North Korea has been funding its nuclear and ballistic missile programs with money made from cyber attacks. That is it though for today's Daily Forecast. We'll see you next time.